Working capital is one of the most difficult financial concepts for small business owners and beginner entrepreneurs to understand. The term means many different things to many other people. Therefore, we will explain what working capital is and why it's essential for any business. Many beginners don't know what this subject is about, and this is one of the most dangerous mistakes for the success of any type of business. But after all, what is working capital? Working capital is the company's current assets to cover fixed and variable costs and expenses. In other words, it is the resources that the company has to cover its fixed and variable costs, regardless of whether it is generating profit or receiving resources from other sources. Therefore, it is the money that will ensure that the company continues to survive and operate while the investments have not yet generated a return. In other words, to survive while the money does not enter the company's account. For example, purchases that were paid in installments by the customer will only be credited after a certain period. Therefore, in the meantime, the company has not received the money.
Our sales
Are not yet high, and operating costs are higher than revenue. These are two examples of where working capital would come in to help and would be extremely important. What is the importance of working capital? Working capital represents how much the company can make available to pay and settle its obligations and bills. Companies that operate with low working capital end up running a greater financial risk. After all, in the event of market eventualities, some emergency financial need or unexpected expenses, they end up being unprepared, that is, without any financial support. Consequently, this means that working capital is directly linked to the financial health of the company. And that is why it is extremely important for the success of your own business. Undeniably, you need to know how to calculate it and maintain a healthy cash flow. In other words, the greater the working capital, the longer the company will be able to remain in business, so that it can meet its obligations even if it stops receiving any amount. Working capital is like a company's financial reserve, which can be used in times of need and urgency, so that it can continue to operate even without sufficient income to pay all the bills. However, you need to know how to calculate the ideal working capital for your own business. How to do working capital. To calculate working capital, you must subtract current liabilities from current assets. In other words, working capital equals current assets minus current liabilities. Current assets refers to assets and rights that can be converted into cash in the short term. In other words, it is any form of resources available or easily converted into liquidity, such as amounts in bank accounts, financial investments, and accounts receivable, among others. The greater the net working capital, the greater the company's ability to meet its commitments and invest. Current liabilities, all fixed, scheduled, or predictable expenses and costs, such as accounts payable, purchase of goods and raw materials, suppliers, salaries, and rent, among others. As we have said before, a very useful tool for determining your needs for how to raise working capital is cash flow. In short, cash flow analyzes the cycles of accounts receivable, inventory, and accounts payable. This can be done in terms of days, weeks, months, or years, for example. In other words, accounts receivables are analyzed by the average number of days required to receive a payment. Inventory is analyzed by the average number of days required to deliver the sale of a product from the point at which it arrives to the point at which it is converted into cash or an account receivable. And accounts payable are analyzed by the average number of days required to pay an invoice from a supplier or service, for example. Cash flow is extremely important because with it, you can analyze the average number of days needed to manufacture a product, inventory days, collect in an account, accounts receivable days versus the number of days financed by accounts payable. However, many companies cannot finance cash flow, accounts receivable days plus inventory days, with accounts payable financing alone. That's why working capital is important at this point. So, if you want to know more about cash flow and how to develop one for your business, watch this video that explains everything about this subject in a very simple way. To watch it, just click on the button right here or on the link in the description. Working capital financing. Consequently, working capital financing is necessary. This deficit is usually covered by internally generated net profits or by external borrowed funds, or even by a combination of the two. Most companies need short-term working capital at some point in their operations. For example, retailers need to find working capital to finance the seasonal buildup of inventory between September and November for Christmas sales. But even a business that is not seasonal will occasionally experience peak months when orders are unusually high. This creates a need for working capital to finance the resulting inventory and accounts receivable buildup. Some small businesses have sufficient cash reserves to finance seasonal working capital needs. However, this is very rare for a new business. How to finance working capital. If your new venture needs short-term working capital during its first few years of operation, you will have several potential sources of financing. However, the most important thing is to plan. If you are caught off guard at some point, you may miss out on the one big order that could jumpstart your business. So, to give you an example and help you build a good working capital, here are the 5 most common sources of short-term working capital financing. 1. Equity. If your business is in its first year of operation and has not yet become profitable, then you may have to rely on equity funds for short-term working capital needs. These funds can be provided from your resources or a family member, friend, or even an investor. 2. Trade creditors. If you have a particularly good relationship established with your trade creditors, you may be able to ask for their help in providing short-term working capital. If you have paid on time in the past, a trade creditor may be willing to extend terms to allow you to fulfill a large order. For example, if you receive a large order that you can fulfill, ship, and collect within 60 days, you may be able to obtain 60-day terms from your supplier. If 30-day terms are normally provided in this case, the trade creditor will want proof of the order and may want to place a lien on it as security, but if they allow you to proceed, this should not be a problem. 3. Factoring. Factoring commercial or commercial promotion is a commercial activity characterized by the acquisition of credit rights for a cash value and in exchange for interest and service fees of accounts receivable on a term basis. It provides immediate financial liquidity for micro and small businesses. However, it is important to know that factoring companies should not be confused with financial institutions. They do not grant loans or discount securities like banks. Their competence is limited to acquiring credit securities and taking charge of them without having to use third-party resources to do so. Factoring is another resource for short-term working capital financing. After filling out an application, a factoring company purchases your account receivable and then processes the collection. 4. Line of credit. Lines of credit are not generally given by banks to new businesses. However, if your new business is well capitalized by equity and you have good collateral, your company may qualify for one. In short, a line of credit allows you to borrow funds for short-term needs as they arise. The funds are repaid when you collect the accounts receivable resulting from the short-term sales spike. Lines of credit are usually made for 1 year at a time and are expected to be repaid for 30 to 60 consecutive days at some point during the year. This ensures that the funds are only used for short-term needs. 5. Short-term loan. Although your new business may not qualify for a line of credit from a bank, you may be able to obtain a short-term loan on a one-time basis, less than 1 year. This way, you can finance your temporary working capital needs. If you have established a good banking relationship with a bank, they may be able to help you. They may be willing to provide a short-term note for an order or seasonal inventory, or even an accumulation of accounts receivable. But be careful. Although knowing what working capital is essential to the success of your own business, it is very important that you pay attention and carefully analyze how to finance it. This is when many entrepreneurs end up drowning in debt as a result of poor financial management and poor strategic planning. Therefore, carefully study all scenarios and see which would be most appropriate for your type of business, and most importantly, the financing style that you feel most comfortable with. You noticed how working capital has a direct impact on a business's cash flow. Since cash flow is the name of the game for all entrepreneurs, knowing what working capital is essential to making any venture successful. Therefore, whether as an entrepreneur or as a manager, keep in mind that preparing your company to withstand seasonal moments is essential from the very beginning of the company. And when starting your own business, you need to pay extra attention. Mainly because when a business is just starting, it will be in the first few months that a good part of the revenue can be used to pay for some investments. It is at this point that working capital becomes essential for your own company until it reaches a break-even point. Now that you know what working capital is, why it's important, and how to manage it, it will be easier to plan and manage your own business more efficiently. However, don't neglect it and don't underestimate the power of working capital at any point in your entrepreneurial journey.
We hope you enjoyed it, and if you want to know more about how to set up and manage your own business, visit our YouTube channel where we have several videos about this subject, and if you liked it, share this video with your friends and family to help them too. Thanks and see you next time.